Today we're going to explore the difference between index funds and mutual funds. I will briefly describe each term, explain the difference, and then talk about which one I think is better and why. An index fund is a type of fund that replicates a group of stocks, known as a market index. For example, there are index funds that replicate the S&P 500. So what the fund will do is own each investment in the S&P 500 so that the results are replicated. So whatever these 500 stocks do is what the index fund will do. Index funds generally track market indexes. And since buying certain investments and holding them in a portfolio is so simple, there is no real stock picking to be done. Whatever is in the market index is what the fund invests in. And since this passive style of investing is so simple and easy, the investors of the fund don't have to pay high fees for management. Now let's look into actively managed mutual funds. When I say mutual funds, I mean actively managed mutual funds. Unlike index funds, mutual funds require their investors to pay high fees because they need to spend money on things like management salaries, brokerage commissions, and advertising. A mutual fund is when investors pool their money in a single fund and let a team of professionals manage their money. This team attempts to beat market indexes like the S&P 500. The fund industry have made the public think that paying the extra buck for professional management will get them better results. You will soon find out that that is false. Index funds are low-fee investments that track a market index, which causes them to achieve steady and average results. Mutual funds, on the other hand, are actively managed funds that the investor has to pay higher fees for. A mutual fund's management team attempts to beat the market index, and they can either succeed or fail in doing so. The index fund, on the other hand, will always achieve the results of the market index. First of all, let's confirm that for the uneducated or beginner investor, index funds or mutual funds would be a good choice since one does not need to know much about investing. Now that we have chosen to compare the two for the uneducated investor, I'll show you some facts before we come to a conclusion on which one is the better investment. As you can see, index funds have been known to do better than actively managed mutual funds over time. Here at Soni Bros, we strongly believe that the uneducated or beginner investor should invest in index funds instead of mutual funds because they have lower costs and better results. And if you're the type of investor who wants to beat the market, you will have to learn about investing and educate yourself. But we can help you with that, so make sure to watch our videos. Thank you and goodbye.